Bitcoin slips ahead of Fed week, DOGE ETH lead losses as traders price in 4.25% rate cut. Open interest climbing from $25 billion to nearly $30 billion reflects fresh leverage entering the market. A double-edged sword that could amplify upside momentum above $112,000 but heighten liquidation risks below $110,000, an analyst noted. Bitcoin hovered around $114,000 on Monday after briefly testing recent highs, as traders positioned cautiously ahead of a Federal Reserve meeting expected to deliver the second rate cut of the year. The broader crypto market tracked lower in tandem, with all major tokens in mild decline. Ether ETH $4,005.45 fell 2.6% to $4,115, while Solana's SOL and Binance BNB each slipped around 2%. The week's early softness followed a strong weekend, when Bitcoin rallied from $104,800 to nearly $116,000 on optimism around U.S. China trade talks and improving global risk sentiment. Bitcoin's recovery underscores renewed institutional inflows and long-term conviction, said Lacey Zhang, research analyst at BitGet Wallet. Open interest climbing from $25 billion to nearly $30 billion reflects fresh leverage entering the market. A double-edged sword that could amplify upside momentum above $112,000 but heighten liquidation risks below $110,000, Zhang added. The setup mirrors a familiar dynamic from earlier this month, where renewed leverage chasing modest strength, only to meet resistance near $117,000 to $120,000. Still, traders appear far less fearful than during the October sell-off that triggered a record $19 billion in liquidations. According to data from CoinGlass, open interest and funding rates across major exchanges remain elevated but stable, suggesting that traders are not overextended heading into the policy week. The Federal Open Market Committee, FOMC, meets on October 28 to 29, with markets widely expecting a 25 basis point cut to the 4.00% to 4.25% range. Analysts see it as the clearest signal yet that the Fed is pivoting toward easing, even as inflation remains slightly above target. Powell is likely to emphasize a data-dependent approach while signaling a controlled liquidity expansion, said Zhang. That balance between easing and caution is what's stabilizing Treasury demand and lifting sentiment across equities and crypto. The Fed's dovish shift comes amid a U.S. government shutdown that has disrupted economic data releases. Powell has reportedly told policymakers that the central bank will rely more heavily on private indicators like ADP employment data in the interim, a nuance traders are watching closely. Bitcoin's 5.8% weekly gain contrasts with the pullback in broader altcoins, a divergence analysts attribute to capital consolidation after recent volatility. The total crypto market capitalization remains near $3.9 trillion, according to FX Pro data, hovering above both its 50-day and 200-day moving averages. The crypto market has positively shaken off its fears, said Alex Kupsakevich, chief market analyst at FX Pro. Bitcoin rose above $116,000 on Monday morning, pushing off the 200-day MA as support. The $117,000 to $120,000 area remains strong resistance, but a sustained breakout could renew highs. Despite optimism, long-term holders continue trimming exposure. On-chain data from On-Chain School shows that coins dormant for over 7 years have been moving at the fastest pace on record, signaling some profit-taking by early adopters. Altcoins were mixed in early Asia hours. XRP traded near $2.65, Solana's SOL hovered around $202, and Doge $0.1953 slipped 3%. TRX $0.2969 was the lone laggard, down 1.4% over 24 hours. With Fed week underway and risk appetite creeping back, markets appear to be shifting from fear to patience. The next directional move, up or down, will likely depend less on policy surprises and more on how traders handle the leverage they've just rebuilt.